Well, hello everyone. This is Emmet and Matt here again on Good Soil Investments interview series. We're interviewing Drew Dickson this time, and he is sort of I understand, a behavioral finance guru or a specialist, and his fascinating investment philosophy. I was introduced to him by our old friend Dr. Wes Gray, who we interviewed a few months back. And Drew, he has a differing views on our favorite growth tech stock. We talk a lot about Tesla. We'll talk about that at some point. But we just want to welcome you to our show, Drew, and tell us a little bit about yourself and your firm and what you do and how you got involved. And yeah, if you don't mind.
Yeah, well, thanks, Em. It's great to meet you guys. Matt, nice to meet you as well. I have been a boring stock picker my entire career for the most part of it. I grew up in Indiana. I went to Purdue. I was a commodity trader for a few years before going back to business school at the University of Chicago, and then from there worked first as an analyst for Fidelity Investments, mostly internationally out in Hong Kong and then London. I worked for a New York-based hedge fund called OXIF. I spun out of there with they're called Sculptor now, I believe.
Okay.
I spun out of there with some Fidelity alumni, and we managed some money for the Mann Group externally. And from that, I launched Dickson Capital and the Alpha Europe funds back in 2008. We were bought by Perella Weinberg in 2011 or 12, and then we stayed with him for a few years, and then spun off at the end of 14 to launch Albert Bridge Capital in 2016. Our focus is very much bottom-up stock picking, primarily focused on Europe, but obviously with some companies and some sectors, things are very global. And our sort of goal is to sort of to marry essentially a deep fundamental dive into the companies that interest us with these notions of behavioral finance. What is it that firstly, what are there mistakes that Mr. Market is making in terms of their analysis? Something's preventing them from processing information objectively. But increasingly, I think the focus for all of us should be as much on what kind of decision-making mistakes are we making ourselves,
Yes.
and what kind of biases do we have? Even Daniel Kahneman, who wrote, he and Amos Tversky came up with all this stuff. Even he says, I discovered all these things, and I still suffer the same biases. So the trick for us as a firm, for me as a stock picker, and also for the investors that we have and the pipeline of investors that we talk to, it's to just try to stay objective and be. We talked about in the emails leading up to this call. Just try to stay nuanced, and understand that there's no certainties. This is not a black and white business. Any one of these stocks, whether you love them or hate them, are not 100% good or 100% bad. I think some of that's lost when you get into these very popular names like Tesla,
Yes.
which is why I am drawn to it. And I have a bit of a history in the traditional automaking sector, so there's a bias right there. I know those companies well, so
Sure.
naturally, I'm going to think that the onslaught of competition is unlikely, and that's something that I need to cure myself, and I've tried to, and whatever sector. And I mentioned I don't just focus on. You'll soon discover I don't just focus entirely on Tesla. You guys are going to know a lot more than I am about it, but I'll have a general broad view in terms of what some of the other, from the perspective of an industry observer, what things look like to me, and perhaps the perspective of some of the other companies who I think themselves have been surprised by how incredibly successful Tesla has been.
Yeah.
But then we get to this bigger question, which we'll talk about, which is the difference between the company itself and then the share price that it reflects. And that's what interests me. So I know you guys will slap a disclaimer on there later, but I've got to be very careful just to make sure I do say that anything I say is not my advice. It's just my opinion. Tesla fascinates me, but I don't have a position. I'm not long. I'm not short. I'm very happy, Emmett, for you that you've done so publicly well in this investment, and Matt, I'm sure you have as well. And I certainly do not know where the stock price is going tomorrow. But what I can do is share my view of what I think's been driving the share price, discuss a little bit about the competitive dynamics of the industry, give you a little bit of my perspective, and hopefully learn a little bit about yours. And before kicking any of that off, I should also say that I've been tremendously impressed by Elon. and the management teams of many of the traditional automakers that I know pretty well admire him and what he's been able to accomplish. Herbert Diess at Volkswagen famously has said, "Yeah, we need to start copying these guys because they're changing the game." And now, where I'm going to differ with some of your followers is I don't think that their task is impossible. I don't think that the task of the legacy automakers is impossible, and we can talk about some of the analogies that I use to help me understand that. But just to be clear, I think he's lit a fire under the industry. I do have friends, some very smart friends, who are not as complimentary as Elon as I am, but that's just not my focus in terms of my view of the. And I also think it's hard to have a nice civil debate about the future when everyone's coming in, like you guys see on Twitter. I'm sure you have Tesla fans tell you guys you're idiots. Believe me, I have. Yeah. Sorry, so you have Tesla bears tell you guys that you're idiots.
We have Tesla fans that tell us we're idiots too. Don't worry. It goes both ends. We're sort of a moderate Tesla bull, not a 90%.
All right.
Extreme.
Well, I get some pretty fun ones whenever I try to say anything that I think is at least worth considering. So I'm glad to have this chat, and I'm glad Wes introduced us because it's not often that folks with differing views, particularly when they meet on Twitter. Get to have a civil debate. And so the fact that we can, and I'm sure that we will, is nice, and that's where we can learn. That's where all of us can learn, and not just me trying to teach you or you trying to teach me, but that's just deciding, hey, either at the end of this call, we're probably just going to agree to disagree. I'm kind of sure that's what will happen, but if I learn some things from you guys that make me want to test a negative thesis, I would welcome that. And that's the way we all should be in terms of that.
We should hope to plant seeds, and even though we probably will remain to disagree, we'll hope in our mind we hope we planted some seeds in you that will grow in a shorter time frame where you would eventually accept Tesla as maybe you accept Apple today, but 10 or 15 years ago almost no one accepted Apple for being a legitimate value stock of any type or. Anyway. Yeah, thanks for your time. I know you do have some interesting folks that you're friends with that are super bears on Tesla and vocal about it, and you're on the sidelines and fascinated by it. And
I am a bear. I'm a stock price bear, even still at $700 or wherever we are right now. And I can walk you through how I get there and and also importantly, I can walk you through where I think I would be wrong. What things would need to happen for me to think, oh, okay, I'm wrong, and we can do that too. So
sure,
I'm happy to go in whatever direction you want, Emmet, Matt.
Sure.
I can explain what I think is a key difference in terms of as a starting point is the setup in terms of how people think about the market. I come from more of a view that there is a total global demand for cars, the amount of which we can debate, and there will be a growing share of cars with electric powertrains, the pace and timing of which we can debate, but that by 2035 or so, it's likely that 70%, 75, maybe even 80% of all cars and light trucks are battery-powered electrics. Now, even you guys, you might find some guys in California, oh, that's 2028 when that happens, or some other guys, oh, that's not going to happen until 2045. But I'm kind of in the mid-2030s, which is not terribly far away, 12, 13 years away. But I think whatever date it happens, in terms of this EV trend, it's happening. And that's not something people would have agreed on 5 years ago. Certainly, Sergio Marchionne at Fiat Chrysler, now part of Stellantis, and others. They're all embracing it. Where my key difference is, and where we might be different, is I believe that EVs are just cars. Tesla bulls think of EVs as if they're completely different from cars with internal combustion engines. To me, they're not. To me, the principal difference is a drivetrain. So much so that EVs are not a new category of automobile. They're just the next evolution of powertrains that sit underneath the hood, so to speak, of whatever car it is that we're all attracted to buying. And that, to me, is my setup for trying to understand why people buy cars. Is it for utility? Is it for luxury? How sensitive is it to this their pocketbooks, to the economy, to whatever it is that makes people want to buy cars. And that's where you get into this. Go ahead, Matt. Sorry.
Yeah, I was going to say, Drew. I kind of like that we're starting off this debate with we basically agree that EV adoption is going to increase, and that's kind of even the traditional automakers are recognizing that now. So it's like we kind of agree on the setup from a big picture perspective, but in terms of who are going to be the winners and what does the market look like, sounds like there's some room to disagree there a little bit. So, I'd like to maybe just give maybe two reasons why I think it's maybe not as simple as you just put out, and maybe give you some room to push back a little bit. One would be the ability for software to be an increasing percentage of the sales. So that's not something that you've seen historically in the auto market, where particularly like with Tesla, I would understand the reasons that people would be skeptical of full self-driving, but at a minimum, I think there's some percentage chance that full self-driving, even if you just look at it as a driver assistance system, which some percentage of the population will opt to purchase at a price of $12,000. I mean, at a $12,000 option, which is almost entirely margin. That's roughly equivalent to the margin potential of it's probably higher actually than the gross margin potential of a traditional ICE car. So I think that's a fundamental difference in EVs as opposed to where vehicle margins have been historically. So I'd say that's one difference. The other I think is just relating to how the incumbents are capable of leveraging their skill sets. So I also I'm here in Michigan, did a couple internships with General Motors, have a lot of friends and family in the auto industry, so I'm somewhat familiar with kind of the existing supply chain and the strength of the OEMs. And what I would argue is that the OEMs are responsible for designing the cars, right? So they come up with the designs, and for the most part, they are designing and probably building the powertrain. But then pretty much everything else, they are outsourcing, to suppliers who, will bid at a low cost and then ship it to the factory, and then the OEMs assemble it. So if you're right that the powertrain is changing, well, I would say that's like the only thing the incumbents are actually good at, aside from maybe design, if you want to give them credit for that, is on the way out. So you've got these legacy powertrain institutions, and I was actually an intern at GM's powertrain in their powertrain division. And so they've got these huge forging facilities. They've got the stamping facilities that are for the most part, they don't translate to the skill sets and into the strengths that are going to be leading the next kind of evolution. So even if they are successful at somehow making this transition, will they be able to do so at similar margins, kind of given their legacy assets and even like their legacy OPEB costs, for example? So I think those are two pretty big hurdles, at a time when they're selling, at a price point that Tesla's making already a 30% gross margin in, and the incumbents are already saying they're essentially losing money on their EVs. So to me, it's a very hard tightrope walk for them to execute at this point. But I'd be curious what you think about those 2 points.
No, I think you're making some great points. So one thing I would add is that originally a lot of these auto parts, as you'll know from GM, used to be part of General Motors or Chrysler, and they got spun out to be their own independent companies and suppliers to them, or suppliers to the entire industry, because it made more sense. So there is an argument that this verticalization kind of makes sense in some ways in terms of focusing on what you're good at. But your question is really good about, okay, what are your core competencies? What is it that you're good at? And to me, I kind of come at it always from the demand angle. Okay, what is it that people are buying? And it's true, I think, that to some extent people are buying engines when they buy even an internal combustion engine vehicle. I want a Hemi in my Ram 1500. I want a Cummins diesel, which is not made by Dodge, it's made by Cummins, in my Ram 3500. And so to the extent that there already is kind of a little bit, I think, of an appetite for the engine, and that's been a selling point. But broadly, I believe that it is the design of the car, it is the price point, it is the utility the car offers, and it's also the brand, it's the image that people are buying, from Toyotas to Ferraris. And my question, and this is what will be interesting, is how sensitive will buyers be to these in some cases, Porsche 911, for example. There's a love for the brand, there's a love for the car. As that transitions, or as sort of enabled offerings become available, how rapidly will the customer migrate? And let's make the assumption that he or she will. I do think that's the case. But I do believe that there are many things that drive people to buy cars, and that those things vary widely, those tastes, those appetites. And consequently, and this is where I struggle a bit with Tesla's capability of selling 20 million cars or capturing 15% market shares, which is implicit in the 20 million car, or whatever number people think they're going to get to. Demand's diverse. Demand for automobiles is diverse across price points, diverse across utility. Volkswagen, across all of its brands, has over 90 different models of car that it sells. And then within many of them, the Volkswagen Golf has 6 different trims. And that's because of customer appetites, customer taste. I want a Volkswagen Golf, but I want the best one, or I want the cheapest one, or I want these features, I don't want those. And so you have a lot of brands and models that have been created to suit specific tastes and appetite. Volkswagen is just one company. It's one of the largest. It's got 12% market share globally, similar to Toyota. Both of them coincidentally started in 1937. And for Tesla to produce 10, 15, 20 million cars, it's hard to me imagine them getting to that level with 6, 8, 10, even 20 different models of Tesla.
So you believe it might be like a demand constraint eventually to get to that level versus a supply constraint for them?
Yeah, and that's one thing I wanted to focus on is I do think that a lot of Tesla fans look at the model plant capacity and assume that no matter how large the plants become in Texas or Shanghai or Berlin or wherever they are in Germany, or how many more of them are built, that there will be demand to meet that supply. I have seen this mistake made in many other industries. You go through waves where everyone wants to own steakhouses. Well, if they just build this many steakhouses in this many cities, look at what demand's going to be. And that led to overpricing of shares and then a subsequent collapse in the share price. And when things are going well, I'm not saying this necessarily about Tesla, although I think it's very possible. When things are going well, investors will extrapolate current year growth in perpetuity, and just assume
and
that
percentage-wise, it's impossible to be 50% for 20 years straight. Yeah, it's impossible. Yeah. So
yeah, it's a field of dream strategy. If you build it, they'll come, and eventually you build it and they don't, and that happens to every company in every industry. Now that's not necessarily a bad thing, because that's when if you're smart about it, that's when you start harvesting. But to me, the share price and the market cap that it sort of reflects isn't banking on harvesting. It's really banking on that 50% top line growth for many years.
Yeah, I agree. There's that's the crux of the valuation argument for long term. Are they going to be supply constrained or demand constrained to get to that 20 million units per year mark by 2030 or around that time? And Elon's mentioned that's aspirational, but I think they can get to 15 million reasonably, by 2030 at least, if not more than 20 potentially too. There's a range, but there's a path. But the demand is interesting. So, it's hard to measure demand of a product. You have these scores, you have consumer satisfaction ratings, and Tesla scores off the tops on those quantitative metrics, But also I think you have to sort of place a value on something that's very hard to quantify, and I kind of view it as like, and that's sort of where our edge is in some degree, or my edge has been in the past, is just like my personal feeling and my friends and family's personal feelings, or other people who own a Tesla and didn't really know much about it, but now they own it, and now they absolutely love it, and it's like changed their life, like in a very happy way, So do you personally own a Tesla? Or, I mean, you might have test driven one, I'm not sure, but or do you have friends or family that own one?
I've test driven. I have friends that have them. I don't own one.
Okay.
But yes, I know the experience is religious for a lot of folks.
Yeah.
I also know
if you're
some
a tech person. If you like technology, yeah.
If you like technology, I also know some guys that own Ferraris and 911s as well, and they have similar sort of love affairs with their vehicles. But no, it's definitely it's fascinating to watch. And as I mentioned earlier, I think it has lit a fire under the rest of the industry, and that then becomes the big question: is will Volkswagen, will GM, will Stellantis, and you talked about AV earlier, Matt, and I do want to address what the AV stuff and the opportunity, just some of these extra things that can happen in terms of what drives margins, and that's something very important to talk about. But as you know, and you might have seen some things I've thrown on Twitter just showing the amount of R&D and Capex that everyone's devoting to solve these problems. Now, how much of that will be wasted? Matt, you worked at GM, a lot of it is, but everyone seems to be getting a lot more focused. Now we're going to see the F-150 Lightning come out, and we're going to see things come out that are going to sell and going to have 300, 400-mile ranges. And I think that's pretty much what we're going to see from everybody within a few years. And so the question becomes, back to the demand question, Emmett, I do this top-down thing. Here's how many cars people are going to buy this year around the world, and that's going to grow at some number. I think it might be slightly higher than normal, slightly higher than a GDP kind of plus kind of thing because of this switch. But even if you get really aggressive about it, I mean, in my sort of base case, I think in 2030 I get to, what's the number? 100. I don't want to say the wrong number. I think it's 130 million of
global sales.
Of global sales. Now, so for Tesla to get to 20, that's 15%. That's 15% of every car sold. Which I'm sorry to smile when I say that, but Volkswagens get 12, and they've been doing it since 37. Toyota's at 12. They've been doing it well. This whole notion that Tesla has all the smartest, brightest guys in the world and a bunch of dumbasses work for everybody else is just not true. There's a lot of smart guys that work at a lot of these places and gals. And Toyota was like a forerunner, no pun intended, in of developing these sort of efficient, sort of lean, focused supply chains and efficiency and margin generation. The margin one, to me, is one of the most fascinating questions. I mean, even after all this, I think Volkswagen does 7% operating margins, and maybe Toyota does 5.5%, or it's the other way around. And now Tesla's blown through those numbers, and we can talk about even backing out regulatory credits and other things, and how and why that's what it is. And I do want to talk about margins, but back to the bigger point for all of us, a Tesla bear or a Tesla bull, is will traditional automakers, which the Tesla fans like to call legacy, as if they're about to disappear, but that's the question. To me, if Volkswagen has 12% market share now, how much market share will it have in 2030? How and will that be? If Tesla does go from the current 1.7 it's at now globally, which I think is, by the way, incredible in such a short space of time to sell that many vehicles, is a real testament to Elon and to the business model, and to the car, and to the philosophy. And that's great, 1.7. And unlike if you would have asked me 5 years ago, what could they ultimately get to, I would have said 1.7, right, at most. But they're going to get to 5 or 6% market share. I don't think easily. It'll take execution. It'll take no sort of surprises happening, particularly in China. But then that's awesome. To me, that's awesome. Now, the stock price wants more than that. And that's where we run into some trouble. That's where I run into some trouble.
Yeah, so there's a lot to unpack there, but I want to maybe just start at a higher level. You talking about a market share and kind of a top down approach. Tesla's execution has been, I think, remarkable. Probably very few, even of the bulls, would have expected them to actually compound at 50% for the past decade, which is actually what they've done. So you're right. It is kind of remarkable. And to me, the history does provide a little bit of a comparison because my grandpa worked at General Motors for his whole career, and they had over 60% market share, I think, when he began his career, and then Toyota came out of nowhere and kind of just ate all the market share and had better product offerings and had better supply chains like you mentioned, and they just kind of steadily eroded at that. So one of the takeaways I have is it's probably harder for, and maybe to use a less get rid of the negative connotation, but for the existing OEMs, instead of incumbents rather than legacy, there's this whole concept of the innovator's dilemma where it may be actually harder for them to make this transition to EVs than it is for a newcomer who is starting from scratch and doesn't have a lot of the older systems. So
100%.
One of the other things I wanted to touch on too is you make a good point about all the different models that the incumbents have and how that's a really valuable way to differentiate on your brand and to reach different customers. But at the same time, I think it can also be an Achilles heel. And if you look at what's happened in the past 20 years, you've seen a lot of these brands die, from Hummer, which is now being resurrected, but Mercury, Pontiac, Saturn, like all these brands which helped to kind of differentiate and get some extra customers. A lot of them have fallen by the wayside, and so while that level of differentiation may help to kind of reach a broader customer set, it also comes with some risks, which I think is important to recognize. And what Tesla has done, and we can debate whether it's sustainable or not, but they are introducing like the Model 3 and the Model Y, and it seems like every category they enter not only kind of becomes the top seller within that category, but it expands the category itself. So you've seen kind of sales levels of the Model 3 and the Model Y, which if you were just looking at the sales segmentation of those markets when they were dominated by internal combustion engine vehicles, you'd say there's not enough room for them to sell 1 million units. Exactly. So there's some expansion and there's some changing of the market, which is
good pushback against my argument that hey, Volkswagen has 90 different models and so does everybody else. So if the Model 3 or the Y or the S, or not the S, but if they come in and they start to capture market share of more than one type of car, then yeah, you're right. Then that's a great pushback against my claim that you're not going to get to 15% global market share with 8 different vehicles. I would say, you mentioned earlier about a lot of other brands, Pontiac disappearing, Oldsmobile at GM at least. Yes, and that's been an interesting thing to watch. I'm not sure that has anything to do with EV. I think that has more to do with a secular appetite for SUVs and light trucks. Basically, the big 3 automakers have abandoned all sedan production. Ford makes none except the Mustang. They make a muscle car. Ford does not make cars. Dodge makes a 300, and then they make the Challenger and the Charger. They don't make cars. Buick doesn't make any cars at all. They make for the Chinese market, but not for the U.S. market. Chevy makes Corvettes and Camaros. Maybe they make a Malibu or something. Literally, it's 70% cars and light trucks now, which people are buying. And now that could change a bit. There's arguments about what drives that. Is it utility? Is it oil prices? Is there sensitivity? I don't think there's as much as people think, but I think that's part of the reason why you saw some of these brands and makes disappear. But to the other point, you mentioned about how the world can change. And I'm not saying this is Tesla's fate, but it's something that we should process, when Henry Ford came out with the Model T, he had 50% market share within years, like they were mid-19 teens. So by 1915, he had 50% market share of all cars sold. And then in the early 20s, Alfred Sloan said, actually, at GM, actually, we should start doing this and make one that's even cheaper or better. And little known fact, but by 1927, 28, Ford's market share was back down to 10. So early mover, had all the share, competitive response, share disappears. And that is, we're all going to go back and find historical analogies to tell our stories. And my favorite one is the whole Nokia BlackBerry
Apple iPhone.
Apple one, which I do want to talk about, and the Tesla bear is going to say, in the case of Ford and GM, but the Tesla bear will say, yes, the Tesla is the Model T, and then everyone else figured it out, and the bull's going to say, no, we need to look at handsets, and Tesla is Nokia, or Tesla is Apple. So we can all find these sort of historical parallels and analogies to try to justify views, but I do think there's something we should process that. And it leads to this question about what information will I discover to make me change my mind? What information will you guys, or could you guys possibly discover to make you change yours?
Yes.
So
good idea. Yeah, I think about that a lot. I've been thinking about that for a long time, and I get challenged by that by family members or whoever occasionally who think I'm too bullish on Tesla for years or whatever. And I always said, I thought about it, and the thing that would make me, for sure change my mind is, and I've changed a little bit since test driving the Rivian R1T truck, or going in that car, which is a very amazing experience. That car drives very well, similar to like a Tesla in a lot of ways. But if I can test drive personally another EV that I think is comparable or better to the customer delight of driving the Tesla, and I think that company can mass produce it efficiently, then I would change my mind.
Yeah, and you were getting that to earlier as well, Matt, in terms of, that's the big if. Will these traditional automakers be able to mass produce these things efficiently? And we can get to the margin structure in a second in terms of, is there too much legacy cost there for them to compete? But that will be it. I think it's possible that when you get into when you get into an F-150 Lightning, you might have a similar experience as you have with the Rivian.
It's very possible.
This is amazing.
Yeah.
Or it might be crap. You don't know. But
yeah, I think the actual drive experience will probably be pretty good, like a lot of electric cars. But I think the software will be way off compared to what I'm used to with the Tesla. But I also have to have a bias because I'm used to the Tesla now, and I'd have to give it time. But yeah, I would like to, rent a F-150 or maybe buy one, just to have it and own it for a week or a month or a few months even, just to kind of get a good bearing of, do I think this thing seriously competes with Teslas?
Yeah, and that's the big question. Now, for all the sort of negative potential sort of dinosaur arguments against legacy automakers, the one thing I would say is that they're still selling a ton of internal combustion vehicles. It's 90% plus market share. People still want them. That's being mandated out. It's being legislated out. Preferences are changing. Appetites are changing. But they're making a lot of money selling these things. And you could make the argument that at a place like Stellantis or at a place like GM or Volkswagen or Daimler, that's actually a good thing, because you don't have to go out and sell shares. You don't have to raise capital, because you're just generating so much from selling trucks and SUVs that you can plow those proceeds back in, and that's what funds your Capex and funds your R&D. And it is a big difference if you look at sort of, all in. I've got the number here. I want to make sure I get it right. These are sort of broker estimates, so they'll be wrong by some amount. But if Tesla between R&D and Capex spends $8 billion this year, everyone else is kind of ahead of them. They're all bigger: Renault, Nissan, Honda, Stellantis, Ford, BMW, GM, Daimler, Toyota, Volkswagen. But when you add all those guys up, it's like $180 billion, and Tesla's spending, call it $9 billion. Now, to assume that they're not going to make progress with batteries, progress with securing supply, progress in models, progress in software, I think is something that if you want to make those assumptions, you got to stay on it. You got to be like you're doing. You have to stay close to what product announcements they're making, what alliances they're forming with what the products look like as they come out. Because if they do come up with something that is gives users a similar experience, and I've publicly said this, I think Tesla will continue to gain share for at least 2 or 3 more years, like significantly. But I just don't know how that doesn't start to fade as these other offerings show up. And they're going to start sooner. The Hummer you mentioned, I think, is going to be electric, right? So
Yeah.
So it's interesting. It's all interesting stuff. And one thing I do want to say, back in this whole discussion that people are having, and I've had, and I've written a piece about this whole handset comparison, because it is compelling to sort of use that example, and it could be right. But the way I think about it is that let me find my little section here that has some history on that. This sort of metaphor. Again, Tesla bears will say one thing about what's the analogy, and Tesla bulls will say another. But Tesla bulls are not going to say that Tesla is Friendster or MySpace. They'll say it's Facebook. They're not going to say it's Nokia or BlackBerry. They're going to say it's Apple. My counter to that, and this is going to be sacrilegious, but BlackBerry was the technology leader in smartphones, in security, and its users had a similar cult-like devotion to the product. I mean, President Obama changed the law so he could use it in the White House when he first was elected. And Apple, which had been making products since the Ford administration, literally 76 is when they started, decided to get into the game. And within 5 years, BlackBerry's gone. As was Nokia, which had 40% market share in 2007. And Tesla fans like to say that Tesla's Apple in this metaphor. But there are enough parallels to suggest that it could be BlackBerry if the other ones succeed at finally showing up and selling products that people want. But I don't like either analogy, because I do think some of that's broadly irrelevant, because it's back to consumers wanting these differentiated form factors. I really believe that's the case. They don't in handsets. It is all about software. I can't tell if someone has a Samsung or an Apple from 100 yards away. I can't tell. And that doesn't matter anymore. It used to, the flip phones and the bricks and the candy chocolate bars, whatever they call them, and that used to be a big thing. Believe me, it was hilarious back in the late 90s and mid 2000s. But broadly, we've gotten to a place where there's no differentiation in what these things look like. The differentiation is the software and what people have standardized on, and why I think the metaphor might not be as valuable as some think is that Apple doesn't really print money by selling phones. They make a lot of money in the services division, which basically sells a lot of advertising, sells a lot of digital downloads, a lot of app sales. And so when people look at the margins Apple's able to generate, they say, oh, it's got almost all the profitability in the entire handset market. Well, that's because of advertising and digital app sales. And now these may be possibilities for Tesla with its software, but to make a really strong argument for Tesla, non-AV stuff, but just the sort of user experience, you start to ask yourself, well, who is it that Tesla's competing against if it does those things? I do think the traditional automakers are going to partner up with Google, with Apple. You already see it with a lot of the automakers in terms of the interface that they're having in terms of the software experience will be something that's not necessarily designed by the automaker, but in partnership with someone else from Silicon Valley. But so who is it that Tesla's competing against in the software space? We've seen a lot of stuff about the audio, the level 5 stuff, which I do want to talk about and hear your perspective on that. Yeah. But I don't think I really don't think that whole automaking is handsets is is a good analogy. To me, sorry, I don't think the whole, to me, automaking is more like whiskeys or beers. Like people just, I want to drink that, or I want to drink that, and I want to spend that, or I don't want to spend that. And there's a gazillion different beers and whiskeys now that you can choose from to buy. Now, those have become kind of oligopolies, and there's 5 guys that control all of that stuff. But that to me, that's a more apt comparison than this sort of this business where form factors don't matter, and where the profitability is not from selling the product as much as it is advertising around it.
Yeah, so maybe that's a good lead into the conversation around margins and kind of what Tesla's done to date. I mean, you mentioned just how many billions all these other OEMs are pouring into their factories, and while I agree that that's very indicative that a lot more competition is coming, I just find it kind of puzzling that the companies are kind of like bragging about how much they're spending on Capex. Like in my mind, they should be saying, we're going to, get our Capex per unit of capacity down by 20% or something like that. But that's not anything that anybody brags about. And if you look at like the F-150 Lightning, for example, like they're retrofitting the Rouge factory from 100 years ago when cars, looked like this. And so like that's a very expensive and probably suboptimal way to design,
that's what Tesla did with Fremont. Isn't what Tesla did with Fremont.
And you look at their margins from when that Model 3 ramp was all the way up and you had only Fremont. And so they were, like 18%, I think, like when they got to their absolute best at Fremont before they had Shanghai up and running. And then they it's completely inefficient by their own admission. And it's their least efficient factory by a mile. And then Shanghai's up and running at, it's still ramping capacity. But even with just Shanghai and Fremont, they're at 30% gross margins, excluding
it's been
credits,
it's been amazing. I had it to them for sure, and they're doing numbers that I have trouble getting to and understanding. And if they stay there, that's where I'm wrong. I think in the first quarter they reported gross margins of 32.9, operating margins of 19.2. And those operating margins, those are Porsche-like numbers. Those are Ferrari-like numbers, and no one else is getting close. I do question, and this I could be completely wrong, I do question what those look like after they scale into mass market production of some lower ASP vehicles. Now, maybe they can maintain it. Maybe the scale offsets it. But I also think we need to get to a clean view of what things will look like in the out year, which this market cap relies on. So we need to back out the regulatory credits are great. It's great to have them, but they're going to go away. If they don't go away, that's because EV didn't ramp and scale like everyone expects it to. So you can't have your cake and eat it too. So that goes away. If EV does truly take off, reg credits disappear. And there's a smaller issue, which I haven't really investigated much at all, but as they're in this growth mode, they're literally spending twice as much on capital expenditure. So they're spending money, but it's not going through the P&L. It's going over to the balance sheet. And they're depreciating only about half of that. So when you look at traditional automakers, the depreciation numbers and the Capex numbers will be similar, and that goes through and punishes margins. Whereas Tesla is not yet fully depreciating its capital expenses. I think part of that is just because they've ramped up so quickly and they're capitalizing when they build a new factory. So that's going to creep up, right? So that eventually you're going to have, as with all businesses, depreciation and Capex will be similar. And so if there is, and there's a lot of Capex and a lot of depreciation that's going to come from it. So if you make the adjustment, and which I've done just to see what it looks like, and fully depreciate the Capex they're spending as if it was going through the P&L rather than being capitalized over 5 years, you still get big numbers. So gross margins fall from 33 to like 24. So it's still a big number. Operating margins fall from 19 down to 11. So things aren't as wildly amazing as they appear optically, but they're still very impressive. What is Tesla's good? Did they do 15% net margins? That's the very bottom line after going through 14.7
somewhere in that
extra red
neighborhood.
credits.
Yeah, it was in the teens.
When you back out the red credits, it's 14%. And like I said, Volkswagen's doing 5.5, and Volkswagen's doing 7. So, and I also know that Herb Dees, the guys at VW, as they're opening up this plant, they're probably doing as much diligence as they can do on how Tesla's doing it. And obviously, there's the nuance to labor unions and employment and what all that means, and they have to be very careful about how they message things. But yeah, I mean, I'm kind of getting ahead of myself. But that's one of the 2 or 3 things, Matt, that if I get wrong about being negative, I've written it here. If operating margins, excluding red credits and including the stock-based comp, which we can talk about, if they're not pressured as the market share grows, that will force me to rethink my valuation assumptions for sure.
Yeah. Well, and I think it's a really interesting point. That was actually, I think, a really good point that I gave a lot of credit to, especially around, I think it was 2019 or so, when Tesla's Capex was actually under their depreciation level. So a lot of the bears were saying, oh, they're not investing enough for their future. So like they're, essentially planning to grow at 50%, but they're not investing as if they actually believe that that's possible. And that made a lot of sense. But I think what was actually happening in that time period, which is like hard to fathom, is that they were actually investing their capital so freaking efficiently that they could expand production by 50% per year just by being super smart with their Capex.
I've heard that. Matt, I hear you. I've heard that argument, and they have been.
Yeah.
But you really have to have a view, which could be correct, that Tesla is just hiring the top echelon of everybody, because R&D is mostly people, right? Yeah. And you're just hiring the top. It's just the next level of engineers are all going to Tesla, and the rest of them are going elsewhere to make the argument that this is some sort of sustainable competitive advantage.
Yeah,
I mean, I don't know that that's the case.
Seems to be true based on surveys, at least, of where engineers most want to work. It's SpaceX and Tesla are the top 2 kind of consistently.
Yeah. Well, that's because they're getting all these options, dude.
Well, I think it's also mission oriented. Like
I know. I'm kidding. I'm kidding. I know.
It's both. I mean, like people love money, right? But they also love, like when I worked for GM, there wasn't a mission that was super, exciting. There were cool cars for sure, and like there was a lot of, they would do these car fairs, and it would be like, oh yeah, there's some really cool stuff, and they were pushing ethanol at the time, and I was like, okay, this is kind of cool technology, but not the sort of thing that like I'm gonna, get out of bed extra early, put in 80 hours this week because I want to really accelerate, the world's transition to sustainable energy, which is what Tesla's mission is. So
no, I get it.
But one other, so you mentioned earlier, and I wanted to touch on this. I think it runs through a couple different things that we've spoken about. Is like what would have to change for my thesis to be wrong? And I think the number one item that I'm kind of waiting for the shoe to drop, and it hasn't yet, is just demand. So we've mentioned this several times that Tesla's production has grown by 50% per year compounded like forever, essentially, and that still is the case right now. With they're increasing capacity at a rate of around 50% per year. But even though they're doing that off of a base that's already really high, selling 930,000 units last year, I think it was. So you're drastically increasing your supply from that already pretty significant amount, yet their backlog is actually increasing. Like if you look at order times on their vehicles, they're actually longer now than they ever have been before, which means that demand, at least right now, is increasing at a rate faster than 50% per year. So that's something.
I like that. It's true. I would also caution you. Everyone's backed up. Backlogs are big everywhere.
That's true, but a lot of them are backed up because their production is down. And with Tesla, production is actually higher than it's ever been, and they're still increasing. Toyota, Ford, they've got very serious, plant shutdowns, multi-month, that are really significally impacting production. Now, granted, Tesla has that for Q2 as well in Shanghai, but
China,
this was going on before that issue was apparent. And the other thing that kind of gives me some confidence is they haven't even pulled the marketing. They've not spent a single dollar on marketing yet.
They don't need to. He's a genius. He's a
Exactly.
one-man advertising machine. I mean,
Exactly. So it's pretty remarkable. I frankly didn't think they'd be able to go this long without spending a marketing dollar. And that's something where if they do get to the point where they start to have demand issues, that's one lever that they could pull relatively quickly, in my mind, to shore this up. But I think your point is well.
we have the
well
same. We
taken.
have the same. We have the same. That's just, to me, that's the number one thing too. It's just in the other direction. So,
Demand.
effectively, if EVs actually are not cars, if this is a transition from horse and buggy to automobiles, I don't think it is. But if that's what it is, I will be wrong. If indeed EVs are a new category that will require new brands and models, or other, the legacy guys can't make the ones people want. So, for example, I've got a Ram 1500 in the driveway. If I choose to switch over from a 5.7, if my choices are to switch from a 5.7 liter Hemi engine to a battery electric, but I don't want to do that, I'd rather buy a Cybertruck. And if that's the way people are thinking about this, so consequently, Tesla's share of EVs doesn't fall that much as EVs become a bigger part of total auto and light truck sales. Then Tesla wins. They're going to have much more share than I'm modeling. If it turns out that it is a new category.
Yeah, and a lot of it I think alludes to that the call, what we think of as a call option on the autonomy technology. I mean, there has to be some value on that. Matt's talked about it briefly before. I mean, what are your beliefs on the? You think it's far away, or what do you think, Drew?
Well, I mean, I'm probably I read Alex Davies' book called Driven, which talks about the history of AV and where it started and where it is now, and maybe it's a couple years old, but it was interesting to me that Tesla really wasn't even in the conversation throughout the whole book, and I know that the Tesla bears will cite all the research they see from folks that say, well, hey, Cruise and Argo and Waymo and Baidu are all well ahead of Tesla in getting to level 5. But I'm not. I haven't spent a lot of time on it to know whether that's the case or not. I do know that a steadfast belief that no matter what, Tesla's going to win because Elon's at the helm. It could be the right strategy, but I know a lot of industry folks that aren't necessarily have any sort of axe to grind or skin in the game even. Aren't sure about the sort of no LiDAR strategy in terms of AV and where it gets us. And the point of Alex's book is that this all takes a lot longer than we can imagine. And what ultimately, I think, actually interesting, Isaac Asimov wrote about this in the 50s, about this revolution of these autonomous vehicles that, and I think his date was 2040, 90 years ago or whatever it was. It will require ultimately, and I hear the arguments. 30,000 people a year die on the roads in the U.S. and we should have AVs, and that's all compelling, but that'll take a legal mandate to tell people to stop driving their cars and trucks, and it'll have to become like, Minority Report kind of stuff, and we might get there. So how do you monitor? How do you value that? Oh, that's another area, Emmett, where I'm wrong. If Tesla does get to FSD full level 5 first, and no one else does, and it's mandated that people have these kinds of offerings, then you get into this Musk option, this which I call everything outside of traditional automaking, this sort of this stuff that he comes up with, and if GM and Toyota and Volkswagen all have to.
But do you think it has to be mandated too? Like, what if they just get to it first? Don't you think that just be attractive enough to make demand go through the roof even more than?
Yeah, no, I don't think demand. I don't think people are. I mean, yes, in the cities and sort of the folks that you do ride sharing and buy Ubers and all that stuff, or use Ubers, all that. But no, I don't think that. And maybe because I'm 55 years old, I'm an idiot. Maybe my son will completely disagree, but I don't think that folks in the Midwest are going to want to have the car drive them around. And again, I feel pretty strongly that we eventually will have laws against driving. I don't know if that happens in 2050 or when it happens, but there will be laws that say you're not allowed to drive this because this many people died last year. We're trying to prevent that, so you're not allowed to drive, and people get arrested for driving. That's in the future. I don't think that's anywhere close.
Yeah, I mean, I look at it not necessarily from like a mandate perspective, but I think there's maybe two reasons why it might be compelling. One would just be for the convenience feature. So, I have the FSD beta, and now that I'm using it all the time, and it's progressed to the level where it's actually less stressful to have it on than to drive myself. And I like my car. I can't believe how fast it is. It's the most fun car I've ever had to drive. But like for most of the time when I just am, doing errands or whatever, it's actually kind of nice to be able to just, think about other things or kind of free up my headspace and let the car do, the daily tasks. So that's not a change that I necessarily would have foreseen in my own behavior. But, now that I've got this feature, I wouldn't give it up. There's
Well, that's
FSD
very valid. A very valid point.
as a convenience feature, and then the other one I think is if they really do have level 5 autonomy, I think that it really changes the economics of personal transportation in quite a profound way. So even with current Tesla pricing, I mean, I've done some modeling around how much it costs because electricity costs are so much lower. The maintenance costs are so much lower, and if you kind of amortize all those on a per mile basis, you get to well under 20 cents per mile. Whereas the traditional, like the IRS rate, I think right now for reimbursement is something like 55 or 60 cents per mile. So if you get rid of the most expensive part of an Uber, which is the driver's time, you can essentially undercut the cost of of personal car ownership. Now, that would probably take a long time, but you can at one point, at a level of low saturation in the market, you could be, competing directly with Uber and Lyft, and then kind of gradually move the price point down to the point where you're increasing adoption over time. And I think if you're undercutting, personal car ownership and you're getting higher utilization out of these vehicles, that's just a good thing for the economy. It's a good thing for public safety, and it creates economic value.
Let me push back a bit. Yes, it's a good thing for public safety. Good thing for the environment. But in that scenario, which I don't agree with, but if you're right, we're going to need less cars.
Mm-hmm.
Asset utilization, you said it yourself, asset utilization goes up. People aren't going to buy as many cars. These projections for 120, 130 million global SAR in 2030 are going to fall, or 2040, however long it takes, and there won't be as many cars sold. So yeah, you can make a lot more money on it, but you're going to be selling half as many cars because people are going to be ride sharing and using and dialing their autonomous
yeah. But
Tesla.
then in that scenario though, your margins are even higher because you're not selling something at a 30% hardware gross margin. You're selling it at a near 100% software gross margin. And back out a little bit for your your traveling costs and your maintenance costs, and you're going to need a spot to park these and clean these. I mean, I've done a lot of kind of detailed modeling around this. It's not zero cost to operate these, but it is net positive for margins and for cash flow overall to, not be spending so much money kind of forging steel and making all the hardware, and instead just to have a smarter way of transportation. There's more margin potential that way. Than just for kind of selling low utilization.
Sure, but you're
assets.
assuming, sure, Matt, but you're assuming no competitive response, right? You're assuming that they're the only ones that figured out FSD or level 5, right? So to the extent that people will demand things and your margins aren't going to go to 100%. Other people will come up with the same products and there'll be price competition. Meanwhile, the units will collapse in this scenario, which will offset a lot of that.
And it takes a long time to turn over the global fleet. I mean, if you're doing 130 million a year, what's the global fleet? It's something like close to $1 billion, I think, right?
I think
something. Yeah.
$2 billion. So maybe your total global fleet now is only 400 million. Let's say significantly cut down the global fleet. Well, you still have to turn over all the existing fleet to kind of get to the point where you've got that. And so then maybe in 2035, the sales come down. But, in the meantime, and so when I'm doing my modeling, I try to be conservative. And I'm assuming margins are high to begin with, but then they get compressed down over time. And I think that's the only reasonable way you can model this. But
okay, well, what about Go ahead. Go ahead, Matt.
I was going to say, so even if Tesla's trying to get to 20 million units a year, Well, if you've got a global fleet of say 400 million, like we were saying, that you still need to replace those every X number of years. So in my mind, there's enough room for competitors in there, and for a decade plus of very strong margins, and for a sustainable business model thereafter.
But is that the way it would go? I mean, no other software goes that way. You basically get two OSs in anything, and that's how it maxes out.
Well, at 20 million a year, Tesla wouldn't have 100% market share. I don't think it's prudent at all to assume 100% market share, because that would be like turning over the fleet every 20 years, right? Which is too long for a highly utilized.
Yeah, but I'm saying
asset.
I'm saying the market share of whoever comes up with the stuff will be high, whether it's IBM, Microsoft versus Apple from back in the day, or iOS versus Android. If AV is the future, and I really think it's a long way off, but if it is, I don't see that there would be more than two platforms that people would standardize on, and Tesla would have to be one of them. And so, what you guys help me out? The stuff I read says Waymo's ahead, Cruise is ahead, Argo's ahead. Is that all just industry funded research that's making it up, or what's the real story?
So I'll give maybe my 2 cents, and Emmett can jump in too. But I'm testing this FSD beta software, and it makes mistakes all the time, but it also is improving at a rate that's kind of hard to fathom. So 6 months ago, I got it in a little bit more than that, actually, October of last year. It was terrible. It was such an uncomfortable driving experience. It would make mistakes all the time. I was intervening like every minute, it seemed. And then, just kind of steadily got better. And then, I got an update, I think it was last month, and it was like 90% of my issues went away. And there's another update that just went out recently this week that I haven't seen yet, and it seems drastically better again already. So what Tesla has is building is really an approach that's much different from the other competitors in this space. So they're going for the most cost-effective way you could possibly try to solve this problem. So with like deep learning neural nets, where they've got very minimal hardware in each vehicle, so just a set of cameras essentially with a computer chip that they've designed in-house, and then they've got this world-class AI team that's kind of iterating. And so what they're trying to build is a software set that will work in any single environment you could possibly put the car in, and it will handle that situation. What Waymo and most of the others are doing is building, kind of geo-fenced areas where, admittedly, if you went and put my Tesla in Phoenix, Arizona, and compared it to a Waymo, or wherever they are in Arizona, the Waymo will drive better than the Tesla, because it's
Chandler, Arizona.
Chandler, yeah. They've perfected driving within that area. They've mapped the streets with a high degree of precision, but they would have to map the entire world essentially in order to kind of expand. So when I look at Waymo's business model in particular, it's trying to do a DCF of that business and having it succeed. It's like a huge cash bet. I cannot foresee a situation when that business model expands in a way that's cash flow
efficient.
Positive or efficient. Yeah,
the way I see it, it's a very different technology philosophy approach. Matt described it well with the Tesla version. Deep learning neural networks, vision only, so they're not using multi-sensors. The others are using multi-sensor, sensor fusion. They're trying to combine LiDAR with cameras and radar and sonar and other things. They're combining it all to try to understand the world and then make decisions based on the programming they do of if, then, and conditions. And that's hard to program. Like, you can program simple stop signs or other things, but it's hard to program, that kid ran behind that bus. Should I wait a few seconds before I go to see if he's going to come in? How long should I wait? But Tesla's neural network approach is not that. It's this neural network is like this crazy enigma of a phenomenon coming about that I'm like slowly learning and grasping myself. You just feed a whole bunch of data and data sets into the neural network, and somehow it becomes like a brain and understands how to deal with every scenario, and there's like this crossing threshold point where suddenly it step changes even better really quickly, and people have a hard time explaining it. But even the neural network engineers have a hard time understanding exactly how it arrives to these kind of solutions that it can. You've seen it with this new stuff. Tesla's doing it with real world applications with this full self driving, but you can see it being applied with OpenAI's DALL-E. You've probably seen it going around Twitter where people like type in a description and then it comes out with like a cool image describing it, for example, or you feed it an image and it can describe it to a T almost every time. So that's an example of like the software or neural network, not real world necessarily, but it's like within the software.
So what I'm hearing is you're aligned more with the philosophy they have behind solving the problem.
Yes.
And from both of you, I'm hearing, yes, maybe today Waymo's ahead and the Chinese with Baidu.
In a certain city, and especially,
certain cities, but that will change because of your confidence in what Tesla will be able to achieve. Okay.
And even if
so
Waymo
that's then another thing to keep an eye on, right?
Yeah.
That's another thing to really focus on.
Yeah, even if Waymo is still safer in Chandler, Arizona, which is like grid streets, and like maybe it's 99.999999% safe. Well, if Tesla gets to 99.9, like one less 9% safe in Chandler, Arizona, but also everywhere else, well, then you could say, oh, Waymo's safer in Chandler, Arizona, but Tesla's still the safe, almost as safe everywhere in the world. Then suddenly,
Yeah, I guess the thing to be careful about, Emmett, is that surely Waymo will be rolling out outside of Chandler as well, and they probably have plans for growth.
San Francisco, and there's a few cities they're all working on, but they'll be and they'll be a competitive platform. They could be the like you mentioned, the iOS versus Android.
But I do think, and this is a good segue into this notion of, what do you pay to own Tesla stock? And you can get all bogged down like I do in the traditional automaking business. Okay, here's the autos, here's the share they'll have, here's the margins they'll have, and we can debate it. And that gets me to a point where I can value at least the traditional automaking business. And then there's all these other things, which I call the Musk option, which are, they're somewhat ambiguous, sometimes purposely, but they're much harder to sort of push back on, but I think it's important to sort of think about things that way because, if as much as I might want to try to push back a bit on Tesla's current position in AV, or maybe I don't think it's as technologically advanced in batteries as folks like to think because Panasonic's really the partner here. If I don't have anything smart to think about, their insurance business, which Kathy Wood thinks is worth $1 gazillion, and Chris Bloomstrand thinks it's absolute fantasy. Without going to sort of each of these little areas, at least by saying, okay, the auto business is worth this, and all this other stuff Elon might do, or is currently doing, and will develop, or might do in the future, is worth something. At least you guys. Once we figure out what the auto business is worth, at least you can figure out what you're paying for everything else. What's the premium you're paying for that call option? And if the market cap of the company is $700 billion today, or 800, or whatever it is, and that's what the auto business is worth, then you're getting that for free. You're getting all that other stuff for free. You're getting the Tesla bot for free. You're getting everything for free. But if the automaking business is worth 100 or 150, then you're paying 600 for AV and the Tesla bot and insurance and everything else. And I do think that's an interesting way to at least think about, because I think some people don't realize that they're paying for that.
So I would completely agree with the way that you're framing that, Drew. In fact, that's kind of how we think about it as well. So, we model this out in a high degree of detail. We've got a very, detailed discounted cash flow model where we run sensitivities. We say, okay, assuming Tesla solves autonomy by, X year, and then, FSD take rate goes, to a certain point, and you've got a platform fee per mile, and then, that comes down over time. So modeling all that out with trying to do middle of the road assumptions, but for an admittedly optimistic kind of bull case scenario that they solve autonomy. That's worth one price. But then there's another case where you've kind of just got the existing business model as it is today, and there's no autonomy, and the energy business, frankly, isn't worth very much, or with negative gross margins, it's actually not helping the earnings profile of the company. And so, what is that worth? But so when I do that kind of what I would say is like we think of it almost as like a share price floor case. So assuming they just kind of are a good EV manufacturer, and you can debate what those are.
Right.
We would argue, it's actually a level a little bit higher than where the share price is today. So in our mind, you buy a share of Tesla today, and you're getting it at a discount to just the the pure automotive business.
Because you're going to have bigger market shares and bigger margins than I'm going to have in my model.
Exactly right.
And that's the difference.
It's exactly right. Yeah. So I mean, even assuming this, kind of no Musk option valuation, and I know we've gone a little bit over time, so let me know if you need to go. But
no, I love this. This is great.
We're thinking about it like just looking at the last quarter's earnings. I mean, it's very hard to forecast. You and I could forecast out the next month or whatever, or the next quarter, and Wall Street analysts, I think they're projecting $18 for next year, which in my mind is much too low. And in fact, they've been wrong. I think we said this in the email to you. Wall Street analysts have been low on their EPS estimate for Tesla. It was actually 10 out of the last 11 quarters. So it's in my mind, Wall Street has a kind of notorious history of not giving Tesla credit for the things that they've actually done and executed on. And so when I'm trying to use middle of the road estimates for where I think they're going to go, just on kind of the core manufacturing business and even their full self-driving sales, those are only 50% recognizable right now. So it's really not a meaningful contributor to margin. So, I mean, you could assume those go to zero and it doesn't really change the story that much. But they're generating $2 billion of free cash flow per quarter. I mean, like you said, their net margin is comparable to most OEMs' gross margin, and on top of that, they're growing at 50% per year. So, like with their most recent quarter, if you were just to annualize that 322, I mean, they're trading at a PE ratio sub 50%, and they're growing at 50% per year, or sub 50 PE. So that would be a PEG ratio lower than 1, which to me,
This year, yeah. And the question is, how quickly does that 50 fade, or when does it fade? Does it fade? And that's And I agree with you. It's looking 50 to me for the next through 2024 at least. Just due to with capacity, as capacity comes on and the world does what it does. But in terms of FSD, I don't model any of that sort of extra margin in my stuff, other than what helps them get to the numbers that I think they can do versus a Toyota or a Volkswagen. So, and I'll be so if I like I told you, I think I said we're 11% or so. Once you fully depreciate the Capex and back out the reg credits, I think it's 11% net margins, and that's kind of where I am. They'll go up a little bit, but then I think they come back off as they shift into mass market. And now, that's still that's over twice as high as what Volkswagen or as what Toyota does, and it's 400 basis points higher than what VW does. And that's where I get in my base case. I have flex cases higher where they get into the mid-teens in terms of net margins. But I think Adam Smith's invisible hand shows up as we get into the later this decade from the competition, and there will be price competition across these things. And so that's one area where we're going to be different. The other one is just the market share. Like I said, I think they get to 6. They don't get to the 15 that is implied by 20 million. I don't think they get to the 7.5 that's implied by 10 million. Which is back to our discussion, Emmett. Is just because you're building it, does that mean that there'll be demand for it? Yes, based on what's happening today, the answer is yes. But when I can buy an F-150 Lightning instead of a Cybertruck, and it's just as good, in fact, maybe better, at least from my perspective, that's going to make it difficult. That's going to, as folks come up with cars that people want from other vendors, those market share gains in EV or so in overall cars will be difficult.
So let me ask you this, Drew. I mean, it's pretty incredible what Elon Musk, has accomplished, and all of his engineers that he's recruited to come along and work with him. From his early days with, PayPal and some other businesses he started earlier. Before that, he's been a serial entrepreneur his whole life. He's done some incredible things. SpaceX, no one thought you could land rockets. He figured, they're like by far the leader. They're going to create this internet satellite that I use it in my house. It worked great. I have friends who use it. And now Tesla is doing things. So from all of that track record, he's proven lots of people wrong. He's done almost the unthinkable. If 20 years ago you thought that this person, Elon Musk, would come along and be able to accomplish all this stuff by 2022, you'd be like, wow, that person, that's incredible. Like, do we think that type of success and innovation is not going to continue? Do you think about that at all in like your judgment discussion of like where demand is going?
That's part. No, it's a great point, and that's part of the Musk option. That's part of this other thing. But what other things will he come up with next? What ideas will he have? Now,
but do you think he'll let the demand for the Tesla car, do you think he's not going to innovate the car itself enough where the demand will slow down in that latter half of the decade?
Yeah. So, yes, he will try to innovate, and he will continue to innovate, and he'll continue to do amazing things. Do I have visibility? Will it be enough so that they could actually capture more share than anyone in the history of automaking ever has? It's not impossible. I think you're going to think it's a lot more likely than I do.
That's true.
I'll still be very impressed if they get to 6. I mean, that's a massive number. That to me it's incredible, and I just think the stock price reflects much more than that. And to your point, Matt, about that the street has underestimated numbers the last 8 out of 10 or 8 or 10 quarters. They certainly have. And the stock price has responded to that and then some, right? So it's not like the stock price has stood still. Now, I know we've gone up to 1,200 and back down, but still, it's been a big move from the $48 it was at in October of 2019 or the $100 it was at the end of 19, right? We've still had it pre-pandemic. It's still been an incredible move. And that, to me, is something that I want you guys to think about. Just bear with me for a second, but if I were a Tesla bull, this would scare me. Tesla's share price, say so, since the onslaught of the pandemic, it behaves very similarly to other meme stocks. Mm-hmm. It behaves similarly to Bitcoin, NFT pricing. They all generally are kind of up or down on you look at a certain day. They're all red or green. If you look at a certain month or certain quarter, certain year, they're all.
It attracts the same type of investors, the speculators.
It does. So this suggests to me that at least some, at least some of the move from $100 to $1,200 and now back down was driven by flows.
Absolutely.
And are those flows now reversing? And in terms of those flows, there's also Robin Wigglesworth at the FT wrote a nice piece last year about what's happening. The size of the Tesla options market is just mind-boggling. When the stock was at $1,100, I think, what did he say? Tesla was trading $240 billion a day of notional in the option market, which was about the same size as the other 499 stocks in the whole S&P 500.
Yeah, it was like more than half of all the stock options were Tesla options.
Yeah. So so to the extent that and I know they surprised everyone with their production figures and what happened in China is and to operating margins and net margins. It's all been positive, but is it at all possible that the stock price going up with that was, it did this, but then it kept doing that because of the kind of investor it attracts. So that's something to consider. And Matt, one question for you. You mentioned DCFs. What do you do about share count?
Well, I mean, if they're continuing to use stock-based compensation, you have to account for that. So you assume that there's some incremental dilution to account for that over time. Yeah.
Okay, good. Because I grow it at 2.5. Again, the value of Tesla is in tomorrow. It's not today. It's in what's it going to be in 2030, 2035. But I would say they pretty consistently, some of it has been to raise capital, but most has been for stock comp, which is an expense.
And most of it was for Elon Musk, though, to be fair. And so there was a huge amount of dilution related to that latest package. So, I think the rate of expansion decreases from here, but you're right that it will continue.
Okay, that's fine. I mean, since 2011, it's been about 8% a year on average, and it's coincidentally been about 16% over the last 2 years. So again, 8 and 8. I've got it down to like 2.5, but that's still, if it's just rule of 72 stuff. If we continue to see dilution, if it did go 8% a year for stock-based comp, as it has for the last 10, then in 9 years the stock will have twice as many shares outstanding again.
Yeah,
and that's dilutes the current shareholders.
That would be much more of a concern in my mind if there was another compensation package. So he's had, in that time frame that you're talking about, there have been 2 very significant CEO compensation packages which have awarded a huge amount of shares to Elon Musk. I mean, that's the majority of the dilution over that time period. He recently commented on the Q1 call that he's not in conversations to have another compensation package right now. So could that happen in the future? Yes, but I think the base case assumption right now is that stock-based compensation is going to decrease drastically, really just to the level of existing.
No, I agree. I've got it
employees.
going down too. Yeah, but they will give some to the employees.
It's a risk.
I'm going to go to Elon, but
Yeah.
Okay, so let me tell you where else I'm wrong. Just before, I know you guys want to wind this up. If EV, the first point, if EVs actually are not cars, and if it's a new category, and this is horse buggies going to automobiles, I'm wrong. If operating margins, excluding regulatory credits and the stock-based comp, if they continue higher as they go mass market and start to gain 3%, 4%, and 5% share, I'm completely wrong. We didn't talk about batteries, which we were remiss. But if Tesla secures the relationships, the raw material supplies at a reasonable cost, that it's the only one who has that capacity to hit the targets, assuming there's demand for them, they're going to capture more share than I'm modeling, so I'm wrong. And that's a big debate. Like everyone's now saying, "Oh, we're going to do this, we're going to do that," and okay, is there enough lithium to make the batteries, and what's that going to cost, and that whole debate. But if they somehow secured it so they're the ones that can do it and other ones can't, my market share projections are off. And then finally, which we discussed, if they develop level 5 first, I do think we standardize on 1 or 2. Whoever gets there first wins, and another guy will copy it right behind them. And there's not going to be 3 OSs. There's never 3 OSs. There'll be 2. And if they get there first, that's a game changer in terms of operating margins. I do think there's a flip side to that, which is robo-taxis are bad for overall profitability, even if the margin's much higher because we're not buying as many cars and trucks. But those are areas that I would say
Open for debate.
Open for debate, and those are areas where I could be. That's where I would say, oh, actually, you know what? Okay, Tesla is worth this or that, rather than what I think today.
Yeah, Drew, I think you're on the right path for sure, just to investigate it. And we are hopefully on the right path trying to double guess our own confirmation biases and conviction. You know, one, you might call it, it's semantics. Like one could call it confirmation bias. Oh, you're foolish for having the confirmation bias. Or you could call it conviction. Oh, you were so smart to have that conviction for so long when it was successful. In the end, the market will dictate which term we call it, right?
But you're nailing it. That's exactly the debate. And what is it? Sometimes confirmation bias looks foolish until you're proven wrong when they build Shanghai and they crush earnings and the stock triples. But putting my behavioral finance hat on, which is a big sort of focus for me, emotions do guide us, and biases will creep in to me, to you, to all of your followers. And the confirmation biases can be some of the worst. They really can. And those happen when we're seeking information or only listen to information that confirms views we already had. And human beings just do that. The valuable information, the alpha information, is the disconfirming stuff. For me, if Tesla gets to level 5 first, that's great disconfirming information. I get to change my view. So I'm looking for that. I'm reading what everyone's writing about where Cruise is now trialing and how that's going.
And for me and Matt, it's like demand. Where do we see demand waning? Or do I see another product that's equivalent that can be mass produced? You know, that kind of thing. So we're constantly searching, and I think this is healthy for us to all kind of explore this. One thing I wanted to mention is we do give $5,000 to a charity of the choice of the person we interview. Which charity did you pick? And if you don't mind, tell us a little bit about it, and we can talk about it.
Yeah, let me pull it up. That's the one part I didn't prepare for. My wife was diagnosed with juvenile diabetes, actually in her 20s, which was weird.
Oh, wow.
But my 15-year-old son was diagnosed last summer. So I can send you guys the link. I think I have sent the link.
We have the link. Yeah.
But that to me is something that it's it's a weird one. It's not something you die from immediately, unless you don't take your insulin or you take too much of it. But it's there forever, and it can be managed. But it sure would be nice if kids didn't have to go through that and give, basically dealt that card. It'd be nice if we could find a way to identify it early to prevent it from coming. And I'm honestly not sure if the incentives are in place for a lot of the traditional sort of drug companies to want to solve the problem, because it's pretty profitable business, the old diabetes. And so I think to the extent that the foundation can help to try to solve the problem, either in terms of prevention or maybe one day even cure,
That'd be amazing.
It'd make a lot of people's lives a lot better. So that's an important one to me. Can I finish with one other sort of bit on the behavioral stuff, and then we'll go.
Sure.
Back on the disposition bias, and I know the stock has gone from $1,200 down to $700. We're all anchored about it being over 1,000. It hurts if you've owned it, and I can imagine. I don't know what you guys have done with your positions. I have no idea, but just for some of your followers, to the extent that they've seen this come down. Just to point out that for human beings like us, losing money feels about twice as bad as making money feels good. It just does. That's one of the things.
Yeah, for sure.
That's one of the things that drives confirmation bias, and it makes us less likely to sell a stock after it's fallen. It's called disposition bias. It's where Kahneman and Tversky won a Nobel Prize for discovering this prospect theory based on it. We get anchored to what price things used to be at, and we wanted to get back there before we would decide to do anything differently. So the two questions you should have, I'm not necessarily saying to do anything with your position, I'm just saying the question you should always ask yourself is, if you had no history of investing in Tesla, had no position, but knew the story and incorporated some of the stuff we've talked about today, are you certain that you would go out and buy the same exposure that you have today? If you're certain, then fine, you have the right position. Okay? The next question is, if I could ask you or your followers, I do this to myself and my team, not just for Tesla, for any position that we're interested in, predefine what it would take to change your mind. Write that down now. What would I need to see to margins, Matt, to market share, Emmett? What would need to happen for me to think, shit, okay, the story's not as great as I thought it was? Now, that stuff might never happen, and you hope it never happens. But if you've told yourself ahead of time, hey, that happens, I'm going to change my mind. If you've predefined that, it makes it so much easier to make smart decisions and to avoid the confirmation bias, to avoid the disposition effect. And it just basically helps mitigate your own behavioral bias. So whatever those numbers are, come up with them so you would know. And it has to. And this is what I think people have to be careful of. There are some Tesla folks who would. There's not a thing what could ever happen. There's not a development in this world that will happen which will shake their faith in Elon Musk or in the stock. And there has to be. It can't be the case that there's nothing that would happen. China doing something crazy because he's bought Twitter or something. I don't know. But there's got to be something that could happen that would make you think, maybe I shouldn't have this size.
Yeah.
So
I do think that's a really great point, Drew. And there was this meme going around. Maybe it wasn't a meme, but a phrase going around in the Tesla Twitter community a couple of years ago. Not selling a share till $10,000 or something like that. And there were all sorts of people that kind of had this. $10,000, maybe I'll consider selling a share. And in my mind, I get the enthusiasm of wanting to support Elon Musk, but that is completely backwards if you're investing. You should always be kind of reevaluating the information, like you're saying, Drew, and say, does the current data that I have available support a higher or a lower share price, and trying to be as neutral as possible, like I think we've tried to show here, And so I've found that a little troubling, with some of the Uber bulls out there that say, no matter what, not selling a share. Okay, well, if,
well, we know how that
Musk
movie ends.
Tomorrow,
for not Tesla, but for other stocks where people have had that attitude, they're seeing now the other side of that trade.
Exactly. It's
so,
like in my mind,
yeah.
like I can certainly see a path forward where Tesla's worth $10,000 a share. But do I want to, hold today at that price and kind of wait for that execution and just hope that they execute to perfection to achieve it? But not really. So, if Tesla was $10,000 today, my portfolio would definitely look a lot different. Now, would I still be optimistic about the company and think there's room for the stock price in the longer term? Sure, but I wouldn't want the exposure necessarily, unless it was very clear that they were on the cusp of the Tesla bot, for example, or if there was something, that value that warranted that, sure. But I think just saying I'm not going to sell for a decade or I'm not going to sell till I get to this point is potentially a little problematic if new information comes along which changes the theory.
Yeah.
This has been a great, thought exercise, Drew, and appreciate you coming on to chat with us. And we definitely should have you on again. It seems like there's a lot more we can be talking about, and we'll donate $5,000 to the Diabetes Foundation. I do believe
JDRF it is.
JDRF, yeah, it's type 1 diabetes it focuses on, I believe, right?
That's right. That's
yeah,
right.
and type 2 diabetes is a major epidemic going on too, but they're distinctly different in a lot of ways.
Yeah, type 2 is somewhat, I'm going to say preventable, but that's a lifestyle choice, and that's sort of the different. The effect is the same, but when your pancreas shuts down when you're 15 years old and you had nothing to do with it, it should be nice to sort of find ways to see that coming, and fix it. But I appreciate that, guys. I really do, and I've enjoyed this. This has been refreshing for me. It's nice to have a civil conversation about Tesla with folks that disagree with me.
Yeah, too bad we couldn't get your buddy Chris on.
We'll try next time. We'll try next time. We'll try next time. Okay.
Because I hope you didn't think we were ganging up on you. I was nervous about us two and one. We didn't want to seem like ganging up or anything. So.
Oh no. I mean, after Matt wrote me that long piece describing your view, and you wrote, I loved it though. I was like, okay, this is going to be civil, and I'm going to learn something, and so that's what we all should be looking for, that disconfirming information, basically. So
great. All right, Drew. Well, we'll put links to your website and your Twitter profile and such in our your bio section of the chat. If anyone wants to follow you, you're very smart. I follow you on Twitter. Have a lot of good views, a lot of good takes on things. I appreciate it, and we'll have you on again sometime. Thanks.
All right, guys. I enjoyed it.